U.S. consumer spending unexpectedly falls by 0.2% in January. ECB resolves unprecedented payment system outage affecting trillions of euros. And Bitcoin price plummets to lowest level since November 2024. Welcome to the Qnews Economic Bulletin, where we bring you the latest developments shaping the global economy, from key market trends and financial updates to regional economic highlights and forecasts. We provide essential news and analysis to keep you informed. Welcome back. We start off with the United States as the consumer spending, which accounts for over 2/3 of the nation's economic activity, unexpectedly fell by 0.2% in January. This followed an upwardly revised 0.8% increase in December, which had been driven by preemptive buying ahead of tariffs that raised prices on imported goods. Economists had forecast a modest 0.1% increase for January, but the decline reflects fading effects of December's front-loading, unseasonably cold weather, and disruptions from wildfires in Los Angeles. The U.S. trade deficit in goods surged significantly in January, driven by businesses ramping up imports ahead of impending tariffs. The Commerce Department's Census Bureau reported that the goods trade gap widened by 25.6% to $153.3 billion, marking a sharp increase. This rise in the deficit is likely to weigh on economic growth in the first quarter. Goods imports soared by 11.9% to $325.4 billion, reflecting businesses' efforts to stockpile goods before tariffs take effect. Moreover, President Donald Trump announced that a 25% tariff on goods from Mexico and Canada will take effect on Tuesday, March 4th, 2025. This decision comes alongside an additional 10% tariff on Chinese imports aimed at combating the ongoing crisis of fentanyl trafficking into the United States. Trump's administration has expressed frustration over what it perceives as insufficient progress in curbing the flow of deadly drugs from these neighboring countries. A White House official stated that there are ongoing discussions with the Chinese, Mexico, and Canada. President Donald Trump indicated that he's inclined to back a deal between Britain and Mauritius over the future of the US-UK military base on Diego Garcia in the Chagos Islands. The agreement, struck in October, would transfer sovereignty of the islands to Mauritius while allowing the United Kingdom to retain control of the base under a 99-year lease. Trump called the deal very long, powerful, and suggested it would work out very well. The backing comes as Tamar faces domestic pressure over the deal's cost and sovereignty implications. Joining us from Cairo is Al Ahram managing editor, Mr. Muhammad Izzeddin, to discuss the significant economic and geopolitical implications of the Chagos Island sovereignty deal between the United Kingdom and Mauritius. Mr. Muhammad, thank you so much for joining us on the Economic Bulletin. Let me first start by asking you, how significant is the financial commitment of this deal for the United Kingdom economy?
Thank you so much for having me in Q News. Definitely, this deal uh, used to represent a headache to the British government. The British Parliament and the British politicians were in a great disagreement, and there were views to not give up the British sovereignty over the islands, but the international resolutions, the United Nations, in addition to the high expenses endured by Britain by obtaining sovereignty over these islands, also the cost of the military base in Diego Garcia made the decision easy regarding the financial issues. Britain exited the European Union also given the economic gains as Britain saw their staying in the European Union means losses to the government and higher taxes for the payers. With this explains the British stance towards these islands, and also explains the deal and the US satisfaction with this deal in this regard, especially that Trump used to be against this and considered it a threat to national security. But after the meeting with the British Prime Minister, apparently there is an unannounced deal in
Now,
exchange
sir,
for
sorry for
allowing.
cutting in, but
Uh,
with Mauritius reclaiming sovereignty, what economic benefits does it stand to gain from this?
The financial or economic gains for Mauritius are very high. We know that there is a competition over the international trade between China and the United States of America. China considers its presence in this area a lot of gains. The international trade path proposed by China, and as it seeks to complete it on an international level at the same time, the United States is seeking reducing the gains that might be achieved by China economically and trade wise in the Indian Ocean. As now the US considers that any deals to be done in this area would be a threat to national security and would weaken its chances to make economic gains. Also, the military presence that, especially that this base was used in operations launched in on Afghanistan and other areas in Asia, and also in the military moves in different other areas. For Mauritius, it will have a lot of gains. It is a political victory that will be achieved by the new Mauritius president, which will gain political momentum for the ruling party there. Also, trade deals will be signed whether with Britain or the US, or the threat of forming a partnership with China and gaining economic advantages. This is about if the base will serve the national security needs of the United States or Britain by being present in this area, especially that it is highly significant for the national security with the presence of US troops being able to be close to the Arab Gulf and being able to moving to the Chinese Sea and the Pacific Ocean and dealing with any geopolitical variables and changes that might be a breakthrough to deal also with international companies and protecting the US and British interests in the region.
Now, building more on what you said, sir, how does the US UK lease agreement affect economic and military cooperation?
The United States considers the military presence in this region and among others, especially in the new US administration, promotes that the United States is a peacemaker and does not desire war, and also to gain economic gains. So the presence of US companies and increasing the profits and revenues of the United States and also being present to keep the security for peacekeeping or the sponsoring US interests in the region. So it's not surprising that Trump talks about taking over Canada or the Greenland island or supporting the presence in the Diego Garcia base, these islands affiliated with Mauritius for more economic advantages. We have seen the minerals deals with Ukraine. It is in the same regard to achieve economic advantages but through political pressures and also stopping the US grants as a means not for the political submission but for economic gains, among other things related to the sovereignty of different states or the gains or advantages to be gained by these states or by these deals. Here it's not about the military base only, but it means the readiness to go through this competition with China regarding trade roads. All the US projects to be revived in the region by the United States to be present in the Middle East, in Europe, or in Asia, or only talking about money and economic advantages.
Sir, speaking of China, could
بالحديث عن
Chinese investments
الصين
in Mauritius shift regional economic power?
definitely this US presence always seeks to maintain the US reserves of natural wealth and promote what the US can do. If we connect this to what happened in Ukraine, the US exerted a lot of effort to besiege Moscow and Ukraine with sanctions and started importing gas to other European states and stopped the line that gives the gas to Europe from Russia, which might change in the future depending on the advantages to be achieved through the mineral agreements and also the economic promotion of the economic relations for peace, which is the logic the United States is adopting. So that's why Trump is requesting investments and funds from Gulf states, among others, and he's trying to obtain some control in different areas around the world, whether in a conflict state or away or far away from the United States. It's only about economic advantages, and this is the new approach of the United States in the Trump administration and during the Biden administration, the economic aspirations Pardon, in the first Trump reign, the economic aspirations were not as much, but in this second reign, the US administration considered it a very good opportunity to establish the US economic presence and what it calls the gains and losses of the Biden administration and making up for the losses during the past 4 years. The US strategy is the strong presence to obtain more gains and support from partners, regardless of this influence on uh, trade relations. The competition with China and other states remain at risk in the future of the economic aspirations of the United States.
Thank you, Mr. Muhammad Azzuddin, for your insights and for joining us here on the Economic Bulletin. Thank you so much for being with us. And now we move to the latest developments from around the world. The European Central Bank has announced that it has successfully fixed an unprecedented outage in its payment system, which had left transactions potentially worth trillions of euros in limbo for most of the day. The malfunction of the Target 2 system, crucial for settling over 3 trillion euros in daily payments and financial trades, prevented transactions between banks from being processed, while regular bank customers did not feel the impact of the interruption. It raised concerns about the transactions between lenders that are essential for the Eurozone's economic stability. The outage lasted approximately 7 hours. Data from mortgage lender Nationwide has noted that British house prices increased by 0.4% in February compared to January, exceeding economics expectations of a 0.2% rise. Year-on-year, prices grew by 3.9%, slightly down from January's 4.1% increase. The uptick reflects a surge in demand as buyers rush to take advantage of a tax break set to expire at the end of March. Falling borrowing costs have also supported the market. Analysts predict further price growth of 3.5% in 2025 and 4% in 2026, driven by expected Bank of England rate cuts. Preliminary data from the Federal Statistics Office has revealed that German inflation remained unchanged at 2.8% in February, matching January's rate and defying forecasts of a slight slowdown. Analysts had expected a 2.7% rise. The data comes amid economic challenges, including high energy costs, elevated interest rates, and global competition, which have weighed on Germany's economy after 2 consecutive years of contraction. EU harmonized data released by France Statistics Authority has reported that French inflation rate fell sharply to 0.9% in February, its lowest level since February 2021. The drop from 1.8% in January was driven by falling energy prices and slower service sector inflation, and came in well below economics expectations of 1.5%. The decline marks the first time since September that annual inflation has fallen in France and keeps it below the European Central Bank's 2% target for the 6th consecutive month. Economists attribute the cooling inflation to lower regulated electricity prices and a broader trend of disinflation. Final data from the Statistics Office has reported that Sweden's economy grew 0.8% in the first quarter of 2024, up from the previous quarter, and expanded 2.4% year-on-year. Full-year growth reached 1%, exceeding earlier estimates. Strong exports, business investment, and household spending drove the recovery, though consumer confidence remains low. The central bank, which has cut cut rates 6 times since last spring, signaled that rates may have bottomed out at 2.25%. Despite the uptick, uncertainty persists due to weak retail sales, geopolitical risks, and rising inflation, which could delay further rate cuts. Official data has shown that Turkey's economy grew 3% year-on-year in the fourth quarter of 2024, bringing full-year growth to 3.2%, exceeding forecasts despite high interest rates. The government had initially projected 3.5% growth, but revised expectations due to efforts to curb inflation, which peaked at over 75% in May and now stands at just above 40%. Finance Minister credited balance growth to domestic demand 2.1 points and net foreign demands 1.1 points. Statistics Canada has reported that the country's economy expanded by 2.6% on an annualized basis in the fourth quarter, surpassing forecasts of 1.8%. It noted that this expansion is driven by strong consumer spending, business investments, and exports. Statistics Canada also revised quarter 3 growth to 2.2%, up from 1%. Monthly gross domestic product rose 0.2% in December, reversing November's contraction, supported by retail sales growth and its sales tax break. An advanced estimate suggests 0.3% growth in January. Moving to Asia, government data has revealed that Hong Kong's private home prices dropped 0.4% in January, following a revised 0.9% decline in December. For 2024, prices fell 7.2%, reflecting a nearly 30% drop from their 2021 peak due to high mortgage rates, weak demand, and a sluggish economy. Authorities have attempted to revive the market by lifting property purchase curbs and reducing stamp duties for small home transactions. Analysts predict prices could fluctuate by 5% in 2025, depending on interest rate cuts and U.S.-China trade tensions. Official data has revealed that India's economy expanded by 6.2% in the October to December quarter, slightly below forecasts but faster than the previous quarter's 5.6%. The expansion is supported by increased government and consumer spending. Government spending rose 8.3%, while private consumption jumped 6.9%, boosted by rural demand and festival season purchases. However, manufacturing growth remained weak at 3.5%. For the full year, GDP growth is estimated at 6.5%, up from the initial 6.4% forecast, but below the revised 9.2% for 2023 to 24. Data released by Japan's Ministry of Economy, Trade and Industry has revealed that Japanese retail sales grew by 3.9% year-on-year in January, falling slightly below market expectations of 4%. This marks a slowdown compared to the revised 3.5% growth in December, which was initially reported at 3.7%. On a monthly basis, retail sales increased by 0.4% in January, recovering from a 0.8% contraction in December, revised from an earlier estimate of negative 0.7%. The figures indicate a modest rebound in consumer activity, but highlight ongoing challenges in meeting market forecasts. In commodities, oil prices fell over 1% on Friday, heading for their first monthly drop since November, as markets reacted to Washington's tariff threats and Iraq's decision to resume all exports from the Kurdistan region. Uncertainty over OPEC's reduction plans for April and ongoing Ukraine peace talks further weighed on investor sentiment. May Brent crude futures dropped 1.1% to $72.76 a barrel. U.S. West Texas Intermediate crude futures fell 1.1% at $69.55 a barrel. Both benchmarks are on track to post their first monthly decline in 3 months. Gold fell on Friday, putting it on course for its first weekly loss in 9 as the U.S. dollar strengthened and the market awaited an inflation print later in the day that could provide clarity on the Federal Reserve's policy path. Spot gold fell 1.3% to $2,840.25 an ounce. Bullion lost over 3.2% for the week, its steepest weekly fall since November. U.S. gold futures lost 1.5% to $2,852.40. Bitcoin's price plunged to $78,273 on Friday, marking its lowest level since November 10, 2024, and is on track for its biggest weekly decline in over 2 years. The cryptocurrency has fallen 16% this week, its steepest drop since the collapse of the FTX exchange in November 2022. CoinGecko has revealed that the broader cryptocurrency market has also suffered, losing nearly $500 billion in value over the past week. That's all for now. Here's a wrap-up of what we've covered. U.S. consumer spending unexpectedly falls by 0.2% in January. ECB resolves unprecedented payment system outage affecting trillions of euros. And Bitcoin price plummets to lowest level since November 2024. This concludes our economic bulletin for today. Don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at QNewsEG to stay informed. Thank you for watching and stay tuned for more updates on Q News.